Good morning, traders. Welcome back to the channel. Happy Monday. Let's see if we can get our weekly and daily bias knocked down in under 10 minutes. If you stick around, you'll see how I determine my daily bias and my weekly idea as we start out the new week. Also, just something to note, if you're not aware, there was a data leak or data breach over the weekend, and most, if not all, prop firms, especially in the future space, have been promoting security updates or opportunities to reset your password, lock your credit card. Just be aware of that. Brian Stonk has also made a good video on that, so I recommend going over to his X and checking it out. It's not ideal. Personally, I went through and reset all my passwords across all my prop accounts, and I did temporarily lock my credit card. I only use the one credit card for all my transactions associated to trading, so I just had to focus on that one, thankfully. So I temporarily locked that, and I'll be keeping an eye on monitoring any activity on that. So be aware of that, guys. Be safe out there, as always. Alrighty, let's jump into the week ahead, starting with the calendar. And we have a Monday and a Tuesday, quiet week so far to start the week, no news. And then moving into Wednesday, we have CPI. And what do we love about CPI, guys? It is an opportunity to OSOC. That's right. And no doubt my friend Adam from the Day Trading Realtor will be running a live stream for OSOC, and I will be joining him to undertake a couple of evals, see how we go. So of course, you can always grab your Tradeify evals for 33% off for the month of June using code Jimmy Trades. Apex right now 80% off with code Jimmy. Make sure you check out the PA fees and whatnot associated with the accounts you choose, but it is a good opportunity to grab 80% off right now with Apex. So definitely go and look to grab those evals if you want to OSOC on Wednesday, which I will be doing. Alrighty, let's move it on now over to the chart. Let's go. All right, so having a look at NQ here, strong week last week. We weren't able to close above previous week high, and we have stayed inside this weekly bearish FEG. So what I'd like to see, obviously we've got what we would call now previous week high, which would be the low-hanging fruit. So I've got two scenarios here, one being we take out previous week high and then potentially move back into the range, or we move lower today, respecting the 50% level of the previous week, and start looking to move higher and seeking out this low resistance liquidity here and all-time highs once again. That's the idea from the weekly. If we have a look quickly at ES, you can see ES did close above previous week high last week. So looking at the low-hanging fruit, I think the previous week high here would be an opportunity to grab, moving up into this bearish FEG, and then look for a reaction from there. On the weekly, back over to NQ. Let's push down to the daily now. What I like about that 50% level, if we do in fact move lower first, we have this devil's mark right here, which is our candle with no wick to the downside. I always look at this as a high draw on liquidity, strong draw on liquidity, and you can see I potentially could see a move lower to take out that wick through that, to take out that low rather, wick through that for a move higher. If we don't in fact move higher first. If we do move higher first and we sweep out this week the weekly high from last week, then this would still be looking as a strong draw on liquidity. So there's our couple of scenarios there on the daily. For now, I like the idea of seeking out previous day high because that is the low-hanging fruit, and currently we're still inside the range. Strong tool. Let's go back to this one, and we are respecting that top half of the previous day's candle. So looking for the previous day high to be swept out first, so bullish for NQ there. And much the same for ES. I mean, that's really within striking distance there. Could see that high being taken out, and there's that weekly bearish FEG there as well. Alrighty, jumping over to oil now. This is on the chart from last week, guys. We'll go back down to that in a second. Actually, let's just look at that quickly now. We're looking at a break through this level because we had been in this consolidation. So we finally got that breakthrough, a nice close through this level here as well. And then I was looking at a retest of this level, which we got already today, and we've expanded higher. And we have swept out previous day high already. However, this was a nice expansion here, and we have, if we just clear that chart off there, we can see that we are respecting that top portion of the daily candle. From a weekly perspective, a bit asked about there, but you can see why, because I already had those markings on the chart. We are up into a bearish FVG here. So it's an interesting level we're at right now, is right at the equilibrium. Okay, it's a strong week, and we did clear out all this consolidation through here. All right, now, if we do push lower, I want to see the equilibrium respected of the previous week and then continue to move higher. We can anticipate a reaction at the equilibrium of the SIBI here, this weekly SIBI, and we are right at that level. Just want to drop down to the hourly very quickly. So we can see we've had some nice accumulation and manipulation here. We'd like to have seen that even a touch lower into this bullish FEG. We didn't quite get that, and it looks like we are getting some distribution here at the moment with displacement here. So what I'd be looking for as you move into the New York session is for, say, this level here to hold, potentially looking for price to move back into that level there. Alrighty, right, let's keep a bullish bias there for oil. Moving over to gold now on the weekly. And clear that chart off. So quite a on the weekly, you know, it was quite a bearish candle here. We had a strong seller's wick come in. Now, we have swept out previous week low already. And realistically, this is a little bit of consolidation here. In this little bit of a range. Unable to break out of that at the moment. Nothing crystal clear for me on the weekly. Although respecting this down close candle here. So we came up close through that level. We've come back, respected that level, and we're holding that at the moment. So that's the weekly, potentially moving bullish. If anyone's a pattern trader, we can see we're getting this sort of triangle, this wedge here formation. Using that, you know, you'd probably anticipate that being a bullish pennant, bullish flag, whatever you like to call it. There's an opportunity there on the daily to want to move higher. We have had that insight to order flow here on Thursday, closing back inside the range. We closed through this bullish FEG, so that didn't hold, and we're potentially moving lower there. We've got this bullish FEG here that price has respected multiple times. We can see that multiple touches there. In fact, quite a strong level of support. And once again, we've tapped off that level. So what I'd like to see after sweeping previous day low, which we have already, is that we remain in respect of the equilibrium. Therefore, that would push price lower. Or because we have swept out previous day low and respected this, that we push higher off there. So they're the two ideas for gold on the daily. And having a quick look at the hourly, we've got a nice close here through, which, you know, that's a lovely change of state of delivery. So what we need to look at here is for the equilibrium of these down close candles to hold. If price closes through, then we're going to see price continue to fall there. All right, so at the moment, this is still valid until we close through this equilibrium, and then that'll look to start failing. Let's run with a bullish bias for the time being for gold. 6E, weekly. Alrighty. Closure back inside the range. Respecting the equilibrium of the previous week's seller's wick. And we also have a devil's mark here for the open of the week. So I could anticipate price to want to push back a bit lower today. All right, so we'll look at bearish bias there. 6B. Pretty much the same story. We swept out the high, this weekly high. We've closed back inside the range. We have a devil's mark here. And we're respecting the equilibrium or the 50% level of that previous week's seller's wick, and looking to come back into the range here, looking at this level. And that's okay, because I wouldn't mind if we did come back down into this weekly busy before shooting higher again. Okay, last bit, BTC. Let's have a look. There we go, it's better. So we could see that on the weekly, price did exactly what we anticipated. Came down into this weekly gap last week. Had a lovely reaction out of there with that nice buyer's wick. Looking to see price run out the highs here again. It looks like we're starting to break out a bit here on Bitcoin once again. I'd like to see price target and send us to new all-time highs. All right, guys, that's it for today. Thank you for tuning in. Have a great Monday. We'll catch you over in Trade Foundry. Don't forget to grab your evals. Code Jimmy Trades. You know the drill. And we'll see you over in Trade Foundry. Bye for now.